All right, strap in, everyone, because we are going deep on Bitcoin today. Specifically, we're tackling this whole halving thing.
Yeah.
Sent me some articles about it. And honestly, the more I read, the more I was like, wait, what?
Yeah.
Like, everyone's out here talking about digital gold, but there's this hidden countdown clock ticking away.
Yeah, it really is a fascinating way that Bitcoin kind of tries to bake scarcity, right into the system. It's not like dollars, euros, any of those government-controlled currencies. With Bitcoin, the supply is set from the get-go, and halving is how it enforces that.
Makes sense. But before we get too far into the weeds of halving, let's make sure everyone listening is on the same page here, right? So imagine this massive, like permanent record of every single Bitcoin transaction ever. It's all out there in the open, unchangeable. That's the blockchain. And this blockchain is maintained by these miners. They're using their computers to verify and add new transactions to this giant record.
And for doing that, they get rewarded with Bitcoin. It's kind of like the gold rush, right? But instead of picks and shovels, they've got these powerful computers crunching numbers, solving really complex math problems.
So it's like a constant race to solve these problems and grab that Bitcoin reward. But hold on, what happens when that reward keeps shrinking? That's where this whole halving thing kicks in, right?
Exactly. Halving is like this. It's baked right into Bitcoin's DNA, you could say. So every 210,000 blocks, these blocks of transactions that get added to the blockchain, and then that happens roughly like every 4 years or so, the reward those miners get, cut in half.
So like the pizza everyone's trying to grab a slice of keeps getting smaller. Doesn't that mean miners are going to be like, forget this, not worth the effort?
Ah, that's where things get interesting. See, with Bitcoin, it's meant to be deflationary. Unlike the cash in your wallet, which, loses value over time thanks to inflation, Bitcoin, it's designed to get more valuable as time goes on. Because there's a hard limit, only 21 million Bitcoin will ever exist. And halving, well, it makes sure those Bitcoin trickle out slowly, gradually.
So this decreasing reward, it's not a bug, it's a feature.
Yeah.
Meant to make Bitcoin more scarce and, you're saying, more valuable in the long run.
Bingo. And here's the wild part. Historically, almost every time this halving thing happens, Bitcoin's price goes on a bit of a surge, you could say.
You're saying if you knew something valuable was about to be like half as available, wouldn't you want to scoop some up before it gets even harder to find?
It's that fear of missing out. FOMO, it's real.
But wouldn't the miners be losing their minds watching their rewards shrink like that?
It's not quite that simple, though. Remember, Bitcoin's price itself, it's constantly doing its own thing, going up and down. So if the price jumps way up after a halving, well, those miners could actually end up making more, even with the smaller reward per block.
So it's like this delicate balance between the shrinking reward and the potential for like massive price spikes.
You got it. And that's what makes halving such a fascinating event. Let's look back, right? Back in 2012, that was the first halving. Before that, miners were getting 50 Bitcoin per block, which even back then was a lottie after halving. Boom, down to 25.
Seems drastic.
You think panic, right? But nope, check this out. Bitcoin's price before the halving, it was hovering around, like $12? A year later, almost $1,000.
Holy moly, that's a serious jump. So even with half the reward, the price more than made up for it.
Right. And get this, 2016 rolls around, similar story. Bitcoin sitting at around $670 before the halving. 1 year later, over $2,550. And it peaked that year at almost $20,000.
Whoa, so there's definitely a pattern here. Halving happens, Bitcoin price shoots up. But it can't be JSD key because of the halving, can it? Other stuff has to be going on too, right?
Absolutely. You got media hype, more businesses accepting Bitcoin, government regulations changing, all that plays a role. It's this whole ecosystem, complex stuff. But halving, no doubt about it, it's this big event that sends shockwaves through the whole crypto world.
Agreed. So we've got halving, big impact on price, historically at least. But what about all that talk about, Bitcoin being bad for the environment? All those computers chugging away using tons of electricity, right?
You're hitting on a really important point. Bitcoin's growth, it's come with a cost, no doubt. Energy consumption is a major concern, absolutely. But halving, believe it or not, it actually plays a part in addressing that.
Seriously, how so?
Well, think about it. When the reward gets slashed in half, those miners, they got to get creative. They need to find ways to cut their costs, especially energy, just to stay in the game.
So you're saying halving kind of forces the whole Bitcoin network to become more efficient, more sustainable over time.
Precisely. It pushes them to innovate, to find new hardware, better energy sources. We're seeing a shift towards renewable energy, more energy-efficient mining rigs. It's a response to that pressure from halving.
That's really encouraging to hear, actually. But what if, even with all that, a bunch of miners just decide to call it quits? Wouldn't that, like, mess with the whole security of the network?
That's a good question. You might be thinking, what happens if so many miners bail that the network becomes vulnerable? And that's where this thing called hash rate comes in. It's basically a measure of how much computing power the whole network has. Like all those miners combined, how much muscle they're putting into crunching those numbers. If the hash rate drops, yeah, in theory, the network could be more open to attacks. But historically, any dips after a halving have been pretty short-lived.
Interesting. So it sounds like this system kind of corrects itself.
Exactly. The less efficient miners, they might drop out, sure. But then others jump in, drawn by the potential for those sweet, sweet Bitcoin gains. It's a testament to how decentralized Bitcoin is. No single entity in control makes it incredibly resilient.
Makes sense. All right, we've covered a ton here. How halving works, how it's impacted Bitcoin's price in the past, this whole sustainability angle. But I got to ask, what happens when almost all the Bitcoin is out there, like mined? We're already at almost 90%, right? Does halving even matter at that point?
You've hit on a really, really fascinating question, one that takes us into uncharted territory, honestly. The very last Bitcoin, it's not predicted to be mined until, like, the year 2140. And who knows what the world's going to look like then, let alone the financial system. But it's a question worth exploring, and that's exactly what we're going to do in part 2 of our Halving Deep Dive.
Ooh, a cliffhanger. Now I'm even more curious. We'll be right back after a quick break to continue our journey into the world of Bitcoin halving. Welcome back, everyone. We're picking up our Bitcoin halving deep dive right where we left off. And that last question that's really stuck with me, what happens when we're, getting close to that 21 million Bitcoin limit? Seems like the closer we get, the less there is to actually mine, right?
Yeah.
So what keeps those miners going? Why bother if the rewards keep shrinking?
It is a bit of a head scratcher, isn't it? But the answer, it lies in the very heart of what makes Bitcoin, well, Bitcoin. It's decentralized, remember. No one's in charge, no central authority calling the shots. Instead, you've got this network, this system running on something called a consensus mechanism. And those miners, they're a vital part of that.
Okay, break that down for me. Consensus mechanism sounds a bit technical.
Imagine, like, a global network of computers, all agreeing on a set of rules. No one can cheat. Everyone's playing by the same book. That's what the consensus mechanism does, essentially keeps everything running smoothly. And guess who's responsible for maintaining this consensus? Yep, our trusty miners.
So even though the rewards are getting smaller, they're still incentivized to participate because they're basically, what, upholding the whole Bitcoin system. It's like they're the guardians of this digital galaxy.
I like that analogy. They're not just mining Bitcoin, they're validating transactions, securing the network, making sure it all stays honest. That's a lot of responsibility, even with a shrinking paycheck.
Makes sense. Now, you mentioned earlier something about transaction fees becoming a bigger part of the picture as the rewards go down. Can you walk me through how that works?
Sure, so right now, when you send Bitcoin, you typically include a small fee with your transaction. Think of it like, a little tip to the miners for processing your transaction quickly and efficiently.
Like a little bonus on top of their mining reward.
Exactly. And as those block rewards keep shrinking with each halving, well, those transaction fees, they start to look more and more appealing to miners. It's a natural evolution as the system matures.
Interesting. So it's almost like a shift from a reward-based system to more of a service-based model for the miners.
That's a great way to put it. Less about finding new Bitcoin, more about providing the service of keeping the network safe and secure.
Got it. Okay, so we've talked a lot about the nuts and bolts of halving and mining, but I want to zoom out a bit. Look at the big picture. Bitcoin, it's supposed to be scarce, like digital gold, right?
Yeah.
But what does that actually mean for its value in the long run? Like, is it guaranteed to keep going up forever?
The million Bitcoin question. If I had a crystal ball, I'd be on a beach somewhere, not here. But we can look at history, some economic principles for clues. Scarcity, historically, it's been a big driver of value. Precious metals, rare collectibles, you name it. The less there is of something, the more people are willing to pay for it, generally speaking.
Supply and demand, classic. So as Bitcoin gets scarcer, its value, at least theoretically, should keep climbing.
That's the general idea, but of course, real life is messy. It's not just about supply and demand. You've got market sentiment, adoption rates, regulations, all playing a role. Complex system, lots of moving parts.
No guarantees in crypto land, that's for sure. But it does seem like that built-in scarcity gives Bitcoin an edge over, well, traditional currencies. which governments can just print more of, leading to inflation and all that fun stuff.
Absolutely. That fixed supply, it's a big part of the appeal.
Hedge against inflation, potential store value, like digital gold, that's the pitch.
But here's where things get even more interesting. As we get closer to that 21 million limit, the whole nature of the network, it might actually change.
Ooh, no, this is where I get excited. Late on me.
Remember those miners, our guardians of the Bitcoin galaxy?
Yeah, still loving that analogy.
Well, as those block rewards keep dwindling and transaction fees become the main gig, we might see miners start to specialize, focus on different things.
Like what?
Some might stick to validating transactions, making sure everything's legit and secure. Others might dive headfirst into innovation, finding new ways to make the network even better, faster, more efficient.
So the whole Bitcoin ecosystem, it kind of diversifies as it adapts to this new landscape.
Exactly. Different players, different roles, all contributing to the overall health of the network. And that brings us to this exciting world of layer 2 solutions, which are becoming more and more important as Bitcoin tries to keep up with, growing demand.
Okay, layer 2 solutions. Sounds intriguing, but also pretty techy. What are they in simple terms? And how do they impact, the average person who just wants to use Bitcoin?
Think of them like add-ons, enhancements to the Bitcoin blockchain, like apps on your smartphone that give it new powers, new abilities.
So they're making Bitcoin more, user-friendly, more efficient.
Exactly. They can speed up transactions, make them cheaper, even unlock new functionalities that weren't possible before.
Wow, it's all starting to click now. The halving events, the shrinking rewards, the rise of transaction fees, this whole evolution of mining, and now these layer 2 solutions. It's like this incredible dance, innovation and adaptation, all driven by this core idea of scarcity and decentralization.
You got it. That's what makes Bitcoin so captivating. It's a constant experiment, pushing the limits of what decentralized tech can do.
All right, so as we wrap up part 2 of our Bitcoin halving deep dive, what's the key takeaway you want our listeners to ponder?
I think the main thing to remember is that it's a big event, sure, but it's just one piece of a much larger puzzle. The future of Bitcoin, it hinges on its ability to adapt, to innovate, to keep providing value to people. And so far, it seems to be doing a pretty good job of that. But there are still many unknowns. The journey's far from over. Which brings us to the final question we'll tackle in part 3. What does the future hold for Bitcoin in a world increasingly shaped by digital currencies and blockchain tech?
Ooh, another cliffhanger. I can't wait to dig into that. Don't touch that dial, folks. We'll be right back with part 3 of our Bitcoin halving deep dive. All right, we're back, ready to wrap up our Bitcoin halving deep dive. And I'm still thinking about that question you left us with. What's next for Bitcoin? Where does it fit into this whole digital currency revolution that's happening?
Yeah, it's the question everyone's asking, right? And honestly, it's what makes this whole space so exciting. No one knows for sure, but, we can look at what's happening, consider different possibilities, maybe even venture a few educated guesses, see if we can paint a picture of what the future might hold.
Okay, let's put on our futurist hats then. What are some of the big trends you're seeing that could, shape Bitcoin's destiny?
Well, one thing that's impossible to ignore is the growing acceptance of digital currencies in general. We've got central banks all over the world experimenting with their own digital versions of, traditional money. And more businesses are accepting crypto as payment, big companies, small shops. It's becoming more mainstream.
Yeah, it definitely feels like the conversation has shifted. Crypto is not just this niche thing for tech geeks anymore. It's going mainstream. Even my grandma knows what Bitcoin is these days.
Uh-huh. That's a good sign. Though, to be fair, it's still a pretty new and complex technology for a lot of people. But the point is, the world's waking up to the potential here. So naturally, a lot of people are wondering, is Bitcoin going to become like the global currency,
Yes.
replacing the dollar, the euro, all that? What do you think? Is that even realistic?
That's the dream, right?
Yeah.
A global decentralized currency not controlled by any one country. Part of me thinks it would be incredible, but it also feels a bit, sci-fi. Are the challenges really that big?
It's definitely possible, but yeah, there are some major hurdles. Bitcoin's volatility, for one, it's a big concern. The price swings can be pretty wild, which makes it, not ideal for everyday transactions. And then there's the whole regulatory landscape. Governments, they're not always known for embracing things they can't control, right? A truly global currency? Well, that would require a level of international cooperation we haven't really seen before.
Yeah, good point. Not every government is going to be thrilled about a currency they can't manipulate. Could definitely cause some chaos if Bitcoin suddenly became a major force in the global financial system.
Exactly. It would be a massive shift. And the transition, well, it wouldn't be smooth sailing. But for a moment, let's just imagine, what if we could overcome those hurdles? What might a world where Bitcoin is a major player look like?
Okay, I'm game. Let's imagine. What comes to mind?
Well, think about it. Transactions could be faster, cheaper, more transparent. You could send money across borders without those crazy fees or having to go through banks. It could empower individuals, give them more control over their own assets. It's a world with a lot of potential upside.
Sounds pretty utopian, almost like something out of a sci-fi novel, right?
Yeah.
A world without financial borders where everyone has equal access. It's a compelling vision.
It is, but like with any major technological shift, there are potential downsides too. A world dominated by digital currencies, it could raise privacy concerns, for example. How do we protect our financial data in a decentralized system?
Hmm.
And how do we prevent new forms of inequality from emerging? These are complex issues we need to think about carefully.
Our technology, it's a tool. It can be used for good or bad.
Hmm.
It's on us to think critically about the potential consequences and steer things in the right direction.
Absolutely. That's why these conversations are so important. We need to understand both the benefits and the risks so we can create a future where tech empowers us, not the other way around.
So beyond this whole global currency debate, are there other paths Bitcoin might take? Other possible futures we should consider?
Definitely. One intriguing possibility is that Bitcoin becomes less of a, everyday currency and more of a digital gold. Its limited supply, its decentralized nature, these things make it attractive as a store of value, especially during uncertain times. We've already seen this happen actually during recent market downturns. Investors, they flock to Bitcoin as a hedge against inflation, an alternative to traditional safe havens like gold.
So in that scenario, we might not be buying our groceries with Bitcoin, but we might be holding it as a long-term investment, like a digital version of gold bars.
Exactly. It could become a core part of a diversified portfolio, offering a level of protection against the risks of the traditional financial system.
That makes sense. And it seems like that scarcity built into Bitcoin's design would be a major factor in its appeal as a digital gold. What other possibilities are out there?
Well, another possibility is that Bitcoin evolves beyond being just a currency and becomes more of a platform for innovation. Its underlying technology, the blockchain, it has the potential to revolutionize a lot of industries, from supply chains and healthcare to voting systems, and even how we verify our identities online.
Wow, that's a pretty wide range. So we're not just talking about money anymore, but using this tech to create new systems, new applications, new ways of doing things.
It's about changing how we organize and verify information. And the possibilities, well, they seem pretty limitless at this point. We're really just getting started figuring out what blockchain can do. That's what makes this whole space so exciting. It's a constant experiment, pushing the boundaries of what's possible.
So bringing it back to our main topic, where does halving fit into all these potential futures for Bitcoin? Is it still relevant if Bitcoin isn't just about, being a currency?
Absolutely. Remember, halving ensures that Bitcoin stays scarce, and that scarcity, it's at the heart of its value proposition. Whether it's a currency, a store of value, a platform for innovation, that scarcity is key. It's a fundamental part of what makes Bitcoin different, what makes it appealing.
It's like those halving events, even though they happen years apart. They're like these regular reminders that Bitcoin is designed to be different. It's not just another currency subject to the whims of, central banks and governments.
Exactly. It's a reminder that Bitcoin is an experiment, a test of these principles of scarcity and decentralization.
Powerful stuff. So as we wrap up our deep dive, what's the one big takeaway you want our listeners to walk away with?
I think the most important thing to remember is that the future isn't set in stone. It's something we create together through our choices and actions. The world of Bitcoin, like the world in general, it's constantly changing. It's up to all of us to engage with this technology thoughtfully, to understand its potential, its risks, to help shape a future where it benefits humanity in positive ways.
That's a great point, and it feels especially relevant as we explore these powerful new technologies that are reshaping our world. I got to say, I'm leaving this conversation even more fascinated by Bitcoin than I was before we started.
That's the beauty of it, right? Knowledge often leads to more questions than answers, and that's what makes the journey of learning so rewarding.
Couldn't agree more. Well, that's all the time we have for today, folks. Thanks for joining us on this deep dive into the world of Bitcoin halving. Until next time, keep learning, keep questioning, and keep exploring.